All right, so just take note that this presentation is purely for educational purposes. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. All right, moving along. So like how I start every webinar, I'm just making sure that everybody in this webinar is on the same page in terms of how we analyze the charts, or how I analyze the charts, what to look up for. I mean, the most important thing when you attend seminars or webinars is, yeah, I mean, of course, everybody likes a prediction or a forecast, but it's more important that you understand how the person presenting, how the analyst, how the presenter is analyzing the market, the methodology, whether it suits you, how does he see where the support is, where the resistance is, how does he know a trend is coming or a trend is changing, because the market is so dynamic, right? I mean, I can say that the dollar yen is going up today, but maybe tonight, you know, somebody from the Fed or the Federal Reserve say something which caused the dollar to weaken, and the dollar yen can just drop. So it's more important to always for me to teach you how to fish rather than just give you the fish, you know, the very cliche saying, but it's very true. Okay, so the markets, I mean, how I analyze it, I've been doing it for the same few years, is using price action. Oh dear, Mr. Kwan, you said there's no sound, is it? Yeah, I got a few people saying they can hear me. Anybody else can't hear me? Okay, that's a stupid question. They can't hear me, they wouldn't hear this question. But yeah, anybody else in this webinar? So Mr. Kwan, if you can't hear, maybe you'd like to restart it, because I got a few guys they're all okay. Let me just type into the question box so that you can see it. Sorry guys, just give me a moment. Yeah. Okay, so in terms of price action, right, the first question you ask yourself whenever you approach the markets is, what is the market trying to do? Is it on an uptrend, downtrend, or consolidation? And I mentioned this many times. If you watch previous webinars, what is the uptrend, what is the downtrend, and things like that. Okay, I'll always show you this little cheat sheet of mine to determine the trend. So once you identify which phase the market is in, then you need to ask yourself which one is your point of reference. Which chart is your point of reference? And when I say point of reference, means which chart are you planning your trade on? Okay, so if your point of reference is daily chart, let's say daily is an uptrend, and you're bullish, right? And your point of reference on daily chart, then you should be looking at the 4 hours or 1 hour chart to try to look for areas to execute your trade. And because it's a daily chart, right? So your expectations is set accordingly. So maybe you let the trade breathe, or let the trade take a few days before it will materialize. So it also involves setting of expectations. Okay, that's why knowing your point of reference is very important. So it's different when you say your point of reference is on the 50-minute chart, for example. So let's say the 50-minute chart is on a consolidation mode, and your trade plan is to sell at resistance. Then you're looking for entries maybe on the 5-minute or even the 3-minute chart. Then your expectations then would be different. Okay, it'll be much shorter term. Probably you're looking about within a half an hour time frame or so for the trade to materialize. Okay, so which market the phase is in, which is your point of reference, which chart is your point of reference? These two questions are very important when you're asking yourself. Okay, and then you can start planning your stop loss or take profit and things like that. Okay, for those of you who are new to IG, you guys are aware that IG has something what we call guaranteed stops, right? Yep, guaranteed stops. Okay, if you're not familiar, guaranteed stops, go get yourself familiar. Okay, you can call the help desk, or you can go to the website, read more about it. We're one of a few brokers that offer guaranteed stops, and I think in the current market environment, I think it's very useful, especially when it comes to black swan events or what we call that, flash crash and things like that. You will be very thankful if you're using guaranteed stops. Okay, what guaranteed stop is basically IG guarantees a stop level for you. If you set it at $1, we execute it at $1. Okay, and this is very useful, especially mostly for equities, especially when there's a gap scenario on a Monday morning. The most recent gap scenario was the French election round 1, where Macron and Le Pen got nominated to go to round 2, and there was a gap up on a Monday morning, isn't it? So for those who were short and not using guaranteed stops, then there'll be massive slippage. Okay, so it's just something to share. Okay, so okay, just a quick check. The rest of you can hear me, right? Because I think one or two type in the question box says that they can't hear me. Lenny, you still there? Oh, good. Thanks, Lenny. Okay, so let's take a look at, let's start the indices. Let's take a look at the S&P 500. Now, if you look at the S&P, right, in fact, most of the indices, after the French first round elections, the market just make a turn to be bullish. In fact, very bullish. Okay, very bullish. And you see most indices, right, it has been consolidating for quite some time. After French elections, see this gap? It gap up, didn't even cover the gap, and just continue pushing higher and higher. Now, I know many of you are not accepting this move. A lot of my clients, a lot of traders I speak to always think that this move is not valid. You know, there's no way it's going too high. But if you are a retail trader who's using technical analysis or price action, try not to question too much. Okay, that's why it's very good to just follow price action as it is. Okay, because when we question too much and when we try to analyze and use different fundamental reasoning, okay, it's never ending. Okay, I can have an opinion, you can have opinion. Who's to say who's right, who's wrong? But when you look at the charts, it's very objective that this market is bullish now. Okay, because the chart is where all the sentiment is. I think some of you who attended my seminars before always repeat the same thing. Okay, the charts gives you all the sentiment and what the market is doing, right? So for this case, S&P looking very bullish. In fact, it hit about 2400. So the previous high was, around 24. Okay, right now the key thing is this: can we break 2400 cleanly? Okay, when I say cleanly means a nice candle close above. So if you see this level here, right, the market touch came down. Okay, this was a very significant break after the French elections, the first round. Okay, however, the candle that appeared above the level, let me just push this level a bit higher. Yeah? So the candle that appeared above the 240 level, okay, it's actually a bearish candle. Okay, so this to me, there's a chance that it might be a false breakout. Remember what I mentioned a false breakout is in a seminar or webinar? Okay, basically if you have a resistance level, the market goes up, tries to break above, but then comes back down. And then this resistance that was broken through became resistance again and starts coming down again. So this is called false breakout. And normally in such scenario, right, the candles are normally a bearish candle if it's resistance. Of course, if it's support, then it's a bullish candle, or some kind of bearish pink candle, something like that. Okay, but one significant sign is that the candle is unable to close above the resistance, which shows that there's a lot of selling pressure still. Okay, now, okay, so if you look at the market here, right, there's a possible false breakout. Okay, I'm very keen to see what happens at 2400. Okay, now if we zoom in a bit more, let's go to a 4-hour chart. Oops, sorry. Okay, if you go to 4-hour chart, see, this is the level I'm talking about. Okay, so anywhere between 2400 to 2403 or so. Okay, a close above this 2402, 2403 level signifies quite a bullish move. Okay, but basically what we're looking for is to break the previous high and go up further. It still looks bullish. Okay, it's supported by a little trend line here on the 4-hour chart. It's looking bullish. Okay, but the longer we hang around here and then we start breaking the previous low of around 2397 or so, then I'm more inclined to think that we're going to come back and we're going to consolidate in this level again. Okay, this whole level here. So where we are right now, the next coming days, key level, key resistance levels, anywhere between 240 to 2403. Let's see whether we can break the previous high or we're going to form a false breakout or this resistance is respected and we're coming back down, maybe back to 2380 area. Then we'll be consolidating. Okay. Yes, Sunil, thanks for pointing that out. So Sunil has pointed out that there's a so-called bearish divergence, which is correct. Okay, so if you look at the, it's not the clearest bearish divergence yet, okay, because the price here, if you compare this swing to this swing here, is more of a, still looking double topish, but if you look at the MACD swing, it's actually a lower high. Okay, a clear bearish divergence would be if the price makes a new high, but the MACD makes a lower high. This is a clear bearish divergence. For this case, price has not made a new high. It's a bit of a double top still, a potential double top, yeah. But MACD is making low high. So it's still bearish divergence, but not the strongest. Yep, thanks for pointing that out, Sunil. Okay, so just take note of this level here. Okay, I wouldn't be keen on planning any trade right now. I want to have a bit clearer picture of what's happening around the 240 to 2403 or 2405 level. Okay, before I jump in. Okay, but we are at that level. So just be a bit patient. Okay, we are approaching that level. All right. So that's S&P for you. I mean, if you look across the board at the other US indices, it's pretty much similar. Let's see whether I have US 30. Hold on, let me see whether I can find it. Okay, so just take note of this. I want to show you the, what's my Dow Jones? I got it. Okay, I want to show you Dow Jones, which is another US index. Okay, so if you look at the daily chart, you can see the Dow Jones is a clearer level of resistance. Okay, I can draw two levels here. All right. So we are at that level. Okay, whether you're looking at S&P or Dow Jones, we are at those resistance levels. All right, but just wait for price to confirm it before you jump in. All right, don't be surprised if it breaks new high and they keep pushing higher and higher and higher. So the market is just like that. Okay. Speaking of which, right? Speaking of the market and the behavior right now, have you guys taken a look at the VIX? If you look at the VIX, right, this one is, look at the, sorry. Okay, if you look at the VIX, all right, you notice how low level we are. This level here, the lowest it went August 2016 was around 11.9, and we are at that level now. Okay, we make a spike up around April when the North Korea tensions got caught up in the market. But after that, right, simply just drifting lower. Okay, and it's quite interesting scenario. I know a lot of my clients don't believe what's happening, but it is what it is. Okay, if I draw a line across here, sorry, I don't have data way back in 2008 or so. But I mean, you get my drift, right? We are at really, really low support levels. Can it break downwards further? Absolutely. Absolutely. Okay, the market can do whatever it wants. We're just trend followers. But I'm just pointing out to you that it is at a very low level. So it's very interesting because if you look at 2016, right? We're almost half a year to 2017. And if you look at the VIX, right, the VIX has been a firm downtrend from January of 2017 all the way to now. But if you look at 2016, right, okay, let me just draw a vertical line. So 2016 is from here to here. So you look at 2016, right, it started off in somewhere in the middle. It make a spike up. Okay, came back down and make a spike up again. So there are a lot of spikes up. 2016 is quite volatile here, but 2017 seems to be so sleepy. Okay, I mean, when Donald Trump took over last year, I think a lot of people are anticipating some kind of doomsday scenario, but it's not what it is. I mean, the interesting thing, I'm not sure whether if you guys look back, the market always does what people do not expect. Okay, first round of French elections, everybody think that the first round, nothing much will happen. Market opened on Monday, lots of gaps. Okay, and then the second round came in. Okay, second round whereby Macron finally clinched it. All right, and again, the market, this time the market anticipated something big to happen. But when Macron won, nothing much, not much reaction. Okay, so the market always does opposite. Okay, but it is what it is. It can be very frustrating, trust me. It can be very, very frustrating, but we got to learn how to let go of that frustration. The key thing to be a successful trader, right, is not how the market moves. Okay, the market can do whatever it wants. It can trend up, it can break new lows, it can go all-time highs. That's not your concern. Your concern is your own psychology. Easier said than done, okay, easier said than done. But as a trader, right, I mean, when you start off as a trader, more often than not, you find yourself looking towards external environment to point the finger to find a reason why you're not making money. Okay, but as you mature as a trader, you notice that most of the time you're looking internally in terms of finding reasons why you're not making money. Okay, and then you start being more aware of your trading habits. You start being aware of what you need to do, what you're not doing right. And that's where you start developing the right skills in terms of psychology to become a good trader. Okay, everybody goes through a journey. It's how fast or how slow. Some people give up in between, but at the end of the day, it's a lot of psychology. Okay, and yeah, you're right, Leonard. I mean, the VIX is so low. I don't think everybody is happy though. I know some friends or clients who bought the VIX, trying to hold a couple of months. Okay, again, if you're looking at the VIX, right, the VIX that I'm showing you is a futures contract. So the price that you see on Bloomberg or on the television, that is a different, I mean, it's the same VIX. It moves in tangent, okay, but the price is different, okay, because the VIX that you see on TV or Bloomberg is non-tradable. This is the futures VIX, okay, the futures VIX is tradable, okay, because it's a futures market. All right, so the price is different, but the movement is the same. All right, so just wanted to bring your attention to VIX. Very interesting levels that we are at now. Okay, I mean, I would love the VIX to move up. All right, volatility is always good, but it is what it is. Okay, so that's the VIX for you. Now moving on, let's go to DAX. Okay, so look at the DAX. We go daily chart, looking nice and bullish. Okay, quite similar to S&P. It's trying to test the previous high. Previous high was around 12867. If you look at the MACD, not much divergence, flat line. Okay, but looking very nice and bullish, supported by the 1020 EMA, pushing higher. Let's take a look at the 4 hours. Okay, 4 hours is a bit more consolidating. Okay, again, similar to S&P, I wouldn't do much right now because if you look at the 4-hour chart, it's just consolidating. But I'm very keen to see what happens around the 12840 to 12870. Those are the resistance levels. Okay, anywhere around here. Because if it's unable to break these resistance levels, let's say you take a short and put a stop loss above the previous high, there's a high chance you might consolidate all the way back down to the support level of around 12660 or so. Okay, so let's see whether the market has enough legs to push it higher. Okay, the last catalyst was the French elections. I don't know what's the next catalyst. Probably June 8th, which is about 3 weeks away from now, the UK elections. I mean, I spoke to my UK colleague, and he was telling me that most probably there will not be fireworks because Theresa May just want to firm up her cabinet to make sure that she has the right people to back her up in planning the Brexit. But who knows? All right, you never know when it comes to such markets. So just take a look at these levels. I mean, in terms of resistance, if it fails to break, right, then high chance we'll come back to consolidate back to around the 12660. Okay, there's a DAX for you. All right, shorter term charts, nothing much to trade. Okay, if I see something like that, no direction. I mean, even if you want to trade the consolidation, I don't know what kind of consolidation it is. It's just very, very messy. So I prefer to look at the 4-hour charts onwards. Okay, so we have a little channel going on here, but I'm looking at this level here, anywhere between 12850 to 12770. Okay, to see whether there's resistance. Okay, if I manage to get in a short there, I'm targeting the bottom here. Okay, just very range bound trading. Okay, so you see the steps that I shared with you in the beginning of the webinar in terms of how to approach the market. So step one, okay, let's say step one, you look at the charts. If you are a daily trader, right, it's a different story. Okay, so step one, if I just look, if the daily chart is my reference point, and I'm looking at the chart like that, I would analyze the chart as an uptrend phase. Okay, so I'll be looking for support to buy. Okay, so if that's the case, right, I will zoom into my 4-hour and 1 hour to look for support. right now we are not at support. We are in no man's land, in the middle of nowhere. Okay, support might be the channel support here, or maybe I'm looking for the horizontal visual support around 12650, to get in. Or I'm looking for it to break a key new high above 12860 or 12870, above that, break out, then I get in. Okay, that is if I'm a daily trader because I'm supporting the uptrend. Okay, however, if I'm looking more towards a 4-hour chart, okay, I'm looking more for a consolidation. So I'm looking more for consolidation means that I'm looking for the market to move in between this rectangular zone. Then I'm very keen to look at this resistance level to see whether the market, the bears are still in control and whether they'll push it down from here. Okay, so I'm planning it based on a sideways consolidation trade plan as compared to if I'm planning based on the daily uptrend. You see my difference? Okay, so there's a difference between, it depends on which is your reference chart and what you're planning for. Okay, both are valid, but most important, you must know what you're doing. All right. Leonard says that he thinks Brexit will come to play somehow. Is far from over. Yeah, I agree, man. I mean, you never know when it comes to all these news. Okay, I've been trading for about 6-7 years, and I'm at the point whereby, actually since last year, I'm at the point whereby I've given up trying to predict what the news is going to be. Absolutely no point. I mean, yeah, you can try to form a view, and you can try to capitalize the movement. But for me, because I just rather follow price action, it's so much easier. Okay, and when it comes to trend trading, it's always the path to least resistance, right? I just don't want to clutter my mind with too much information, so I just want to, if I see the chart make a new high, I'm bullish, I follow the trend. If I see the chart break support, I'm bearish, I follow the trend down. So keeping it simple like that. All right. So that's the DAX. Moving on now, let's go to the Nikkei. Okay, now Nikkei looks nice and bullish. Okay, very similar to all the other indices. Right now, if you're bullish, right, I think it's a bit too late to enter anything because it's very clear that the resistance is around 20,000. Okay, it's around the 20,000 level. I'm very keen. See this level, this line I drew here, anywhere between 19,660 or so. Right, this whole level here, these two lines I drew. Very, very strong resistance. All right, it has been resistance for almost how many months? 6 months, from 2016 December all the way to April. Okay, this whole resistance. We have broken through it clearly. Okay, I'm expecting another pullback, maybe back to this level. Okay, back to the scene of the crime somewhere here. Okay, the reason why I'm saying that is because if you look at how the uptrend broke the key resistance, right? It's just like, I mean, if you look at, the theory of the rubber band, okay, as it gets stretched further and further, there's a higher probability that the tension will snap it back, right? So the same thing as this chart here. I mean, if you look at this uptrend, right, there's no particular retracement or pullback at all. And it's just a stretch, broke the resistance, still stretching, now it's still trying to stretch. Okay, so I anticipate it to retrace at least to 19.6 before, and maybe gather more bullish traders before pushing higher. Okay, when I trade breakouts, right? Okay, let me draw a line. So when you trade breakouts, okay, let's say this is a resistance, right? I like to trade breakouts whereby there's nice volatile trend, nice pullbacks, and then it breaks out. Okay, or even better if it tests a couple of times and then it breaks out. Okay, because this kind of consolidation, right, shows that there's a momentum building, okay, before it breaks out. All right, so as compared to what we have here for the Nikkei, again, the rubber band theory, right, the market simply just maybe a small retracement, just go up, and then it just breaks out like that. Okay, so a lot of traders probably miss this because of the way it just shoot up like that. But rubber band theory, right? The tension most probably causes it to snap back a bit. Then maybe it'll go up further. All right, so you see the difference? Okay, so for this case, I'm just going to be a bit patient. But key level to look out for Nikkei, right? I suggest if you're trading the Nikkei, you might want to put an alarm anywhere around the 19,700 area, 19,650, 19,700, because this is a key resistance and it might turn to support. What it's trying to do now is that it's trying to break a new high. Okay, it's trying to break a new high. I think it's it might be consolidating. Okay, similar to the DAX, similar to S&P, the key level for the Nikkei is 20,000. In fact, it's interesting how all the indices are moving in tangent. So Nikkei looking at 20,000 level, and if it breaks above, yeah, it's bullish. Okay, but I'm looking more for bears to come in here again, and hopefully we can set it down back to consolidation around here, and then maybe back to the circle region. Okay, but key levels I'm looking out for is this circle area that I mentioned because of the key resistance turn support. If you zoom out the chart, you can see it. Yep, those levels. Another level I'm looking out for is the 20,000 level. Okay, to see what it gives. All right, this is Nikkei for you. So very similar story to most of the indices. I think it's better to be a bit more patient and see what it wants to give us before jumping in. Okay, so that's Nikkei. Let me go on to the Hang Seng. Oh, sorry, Sunil got a question. Sunil said that it's not consolidating now at resistance. He's talking about Nikkei, right? Come on, charts. Sorry, taking so long. Sunil, I'm assume you're referring to the Nikkei, right? Yes, it's not really consolidating yet. It's trying to break higher. Okay, but we shall see. We shall see because the 4-hour chart looks like, I mean, based on this candle, looks like 20,000 seems to be respected. So we shall see. And for all you know, it might drift back to this support level, and then most probably it'll consolidate. So we shall see. I think it's still consolidating. Yeah, if you look at the 4-hour chart. Okay. Lenny, you say that does the theory of rubber band apply to S&P 500? It's all the time high so far. Let me have a look at S&P again. When I talk about the rubber band, I'm talking more towards breakouts. Yeah, I mean, if you look at the S&P, and if I zoom out, right, there are several retracements like that. See, there are retracements here, retracements here, retracements here, retracements here. So it's not really an extended push as compared to the Nikkei, but the Nikkei I'm looking more towards the 4-hour chart, right? So so we zoom in, right? You can see that the S&P, yeah, is pushing higher and higher. Okay, but it's not as extended as the Nikkei. The Nikkei is a bit more, it looks a bit more extended to me. Okay, but the rubber band concept, you got to take it into context, Lenny. You got to see what kind of time frame you are looking at. Okay, if you look at the longer term time frame, actually the S&P has made certain decent consolidations or corrections before pushing higher and higher and higher. Yep. But the Nikkei, I'm just looking a bit shorter term. I'm just talking more towards the recent breakout that it's a bit extended to me. Look at the day chart here. Because you notice here, right? This was a break of the support. And you have every right to say that this is the start of a downtrend, okay? But when the Monday morning opened after the first round of French elections, the thing just simply just push up just like that. Okay, and I'm just saying at this key level of resistance, there is not enough momentum gathering before making a higher high. It just went straight through. Alright, so this is what I'm talking about, the rubber band effect. For the S&P, not so. Alright. Okay, so that's the Nikkei. Alright, you guys have, let me just cover the Hang Seng now before I move on to, any of you traded the STI? I mean, IG, we just launched the Straits Times index a couple of weeks back, right? If you guys have any feedback, feel free to shout out. Okay, so if we look at the Hang Seng, super bullish. Okay, the Hang Seng is one of the more bullish indices out there. Okay, it's approaching resistance at around the 25,400 level. This is a weekly chart. It looks very bullish. Hang Seng looks one of the more bullish indices. Okay, so very, very bullish. Nice uptrend, no divergence. Good to go to the upside. All right. This is the 4-hour chart. Okay, so what you look out for the 4-hour chart. Now right now, if you are looking to long, just be a bit careful. Okay, be a bit careful because if you see the MACD is a bit of a lower high here. Let me just adjust the line here. Okay, lower high, but the market has made a, oops, sorry, what I clicked. Sorry, I'll go back. So this is a 4-hour chart, right? So this is the market making lower high, but the price making higher high. So it's called a bearish divergence, okay? What I want to look out for is support level at 25200. Okay, hopefully it can consolidate back to this level here. And then maybe you can take it up one more time to the previous high. Okay, but just take note there's a bit of a bearish divergence. I'm looking at the 25200 level. See this resistance to support? Okay, right now it's a bit of a no man's land. Yep, and if you look at the 15-minute chart, yeah, nothing much to look out for. Okay, so I'm a bit more keen to let it come back to this level here, and then from there, push it up further. Okay, but definitely on the uptrend at the moment. All right, just take note the bearish divergence on the 4-hour chart. It's good. Any questions so far before I move on to FX? Thanks, Lenny. Okay, any other indices that you want me to cover before I move on to FX? Okay, if there's nothing, I'll take a 10-second pause and then I'll start with dollar yen.